It's Business Express on Smooth 98.1. Omas and Zibby with you, 6:32. And we have a special guest joining us. We're talking about Nigeria's 1.4 trillion naira trade deficit in the fourth quarter of 2023. As always, we love it when you're a part of the conversation. WhatsApp number is 0809 4440981. You can tweet at Smooth981. And we're streaming live on our YouTube channel as well, so you can catch that live stream. Smooth981, that is a channel on YouTube. Don't forget to subscribe.
So let's cut to the chase, because as soon as these figures came out over the weekend, I had cause to also look at it. But again, let's go over to the specialist Oyinkansola Aregbesola. Let's see what it's looking like. It's the same story all over again. We're going to see the usual culprit there, crude oil being the lifeline or the lifebuoy that makes us float once again and saves us in all of this. What do you make of this never-ending cycle of crude oil being the monolithic product for us that saves our face when these figures come out?
All right. Firstly, thank you for having me. Good morning. So for your question, I mean, you're right about the data being detailed to crude oil as always. When we dissect the export earnings performance, we observe that the share of non-oil and non-crude earnings actually fell by 0.8% and 0.1% year on year, respectively, while crude oil exports earnings once again um, actually strengthened to 80.6% in 2023 from 78.7% in 2022. So the trade numbers basically continues to show how dependent we are on crude oil as a nation, and the economy is basically yet to be diversified. So that's what we are seeing in these numbers.
Just to still stay with the oil as the saving, the sole product that helps us float once again. So consider if oil was able to bring us up to this level and just oppose that with the oil theft going on, and if we had been able to check it, what would the story have been different?
Yes, it would have really, because I mean the continuous oil theft have actually dampened oil production over the years, right? And so that's the reason why we've had, or we are currently facing this issue of low FX supply. So really, if crude oil theft is out of the game, it would have been a different story for Nigeria. Nigeria would have been one of the richest country in Africa, basically.
All right, thank you, Oyinkan, for that. Let's talk about the manufactured goods. So the amount of that, just 2.2% of total exports, right? Largest category of imports was machinery, transport equipment. Is power perhaps that silver bullets for manufacturing?
Okay. Also, before then, let me just quickly comment on the largest category of imports in Q4. That's the machinery and transport equipment. So the material spike that we saw in import expenses was actually due to a 493.3% month-on-month jump in manufactured goods import bills in September 2023 to about 6.5 trillion naira, and it is owing to the country's purchase of tanks and other armored fighting vehicles, motorized and wet from Singapore. That basically cost about 5.1 trillion alone. So that's the reason why we saw that spike, in the import expenses, particularly for manufacturing and transport equipment. So back to the exports and the manufacturing goods accounting for just 2.2%. To be honest, really, if we actually fix power, we fix so many problems, right? So I feel like if power is actually fixed in terms of consistent power supply and all of that, we should see the manufacturing sector improve significantly. We should actually see it contribute so much to the our trade numbers, really.
All right, thank you, Oyinkansola, for that. I'm curious about this bit though. What do you think, or what do you make of the low trade numbers with other African countries? I mean, considering this African continental free trade agreements.
Well, I'll say it's still a work in progress, really. It just shows it just shows that as a nation we are, dependent on, the other advanced, countries for, most of our imports. I mean, looking at, I mean, aside the fact that in Q4, the first ranking country of origin was from Singapore, and that was as a result of the purchase of armor tanks, which is something that, we don't expect the government to purchase on a quarterly basis, right? So, but then there's China on that list, there's Belgium, there's India, and there's United States. So it just basically shows, our over reliance on, their products really. And so basically, if we're to see improved purchases from, relate similar African countries, that would mean that, they are, producing the things that, the country needs. So basically, it's I'll say it's still work in progress, really.
So should I take it from this last submission that most African countries, they yet to add value to their products? So it seems like we have similar products, so we don't need what they have.
Exactly.
So let's go aside. If it's looking this way that Africa, Nigeria did not really trade as well with its neighbors, so they didn't also do the same with us. But it's not saying the same thing going by the report, because I see the top 5 countries in that list in terms of exports. It seems we're making some efforts in terms of exports also to earn revenue. I see Netherlands, India, Spain, Canada, and France being the top 5 exports. Could you help us crunch down the figures a bit from there?
Okay, so for export, really, it's majorly crude oil, right? So we export crude oil to, these countries that you've mentioned, the Netherlands, India, Spain. If you look at crude oil to versus non-crude oil on that list, I mean, if you look at the percentage, it's quite small. For Netherlands, seeing an amount of as high as 1.7 trillion. Like total exports to Netherlands was 1.9 trillion, but out of that, crude oil actually accounted for 1.7 trillion. So it just shows what we're exporting, which is crude oil, which is basically the major export. That's what we are selling to these nations: Netherlands, India, and Spain, and Canada. So I don't see for other products. It's just a minute contribution or a minute sales in terms of other non-oil um, production.
So if you're to give us a grade, at least, let's see what our grade is looking like for attempt at exports, at least what within A, B, and C and E. What would Nigeria get for this attempt by this figure in terms of export alone?
Sorry, I didn't get that.
If you're to give us a grade, Nigeria, for the efforts at getting exports out, using A
Okay.
being your best, and then B, and then E being the worst.
Oh, okay. Okay. I'll say I'll give us a C, an average for now. Yeah.
Okay. Very politically correct. We're speaking with Oyinkansola Aregbesola, investment research analyst from ARM Securities. We're talking about Nigeria's 1.4 trillion naira trade deficit in the fourth quarter. But let's talk about a prediction. Now, Goldman Sachs is saying that they see the naira appreciating to around 1,200 to a dollar over the next 12 months. I mean, we can't talk about trade without talking about these exchange rates. So what do you think of this forecast?
Okay, so really, they actually rightly mentioned that Naira is undervalued, because we've mentioned this in the past. I think the report really overall is cautiously optimistic about, the country's reform and currency, and we're already seeing that payoff in terms of the recent CBN reforms that we've seen in the past, especially especially the few months in 2024. Um, Really, in terms of foreign portfolio investor coming into the country, we've seen asset purchases exceeded $1 billion in February, bringing total receipts so far this year to at least 2.3 billion USD. If you compare this to 3.9 billion that we received for the entire 2023, it actually is looking good, right? So I'll say that the CBN's policy really has been paying off, and if we continue to see similar policies being shunned out, or reforms, and continuous regulation of the FX market, would actually see this play out at the end of the day, because like we have mentioned in the past, what we actually need is FX supply, right? And if we're not getting that from oil production due to oil theft, another way to get that, in the meantime, or in the short time, is actually for FPIs, that's foreign portfolio investors, to come into the country. So I agree with their forecast, and I'm also optimistic. Really, we can actually see the naira, appreciate to that level by the end of the year.
So if you have a choice to either look at the crystal ball, or you look at the mirror, or probably look at a bowl with water in it to give us a prediction for Nigeria's economy, how it will fare this year, could you just look at any of the objects you want to, and let us know what the forecast is looking like from your end?
Okay, I'll just comment on GDP, that is economic growth, as well as the currency as well. So I think, looking at the past reforms that we've seen, I think that we should, see some respite in terms of, currency. Like I'd mentioned earlier, we expect, more effects to come in, and already, even in terms of oil production, we're already seeing it improve over the past 2 months, right? We've seen it gradually improve as, government continue to clamp down on oil theft. So really, it's the outlook is already looking good, right? So we expect to see some appreciation in currency levels when we see FPIs, foreign portfolio, come in, due to the higher interest rates that, the CBN is offering to them, and, as well as, the current reforms that are being passed into the country. And so for GDP as well, yeah, we expect it to, improve, but not significantly, because, the downside of these reforms, for example, higher interest rates would lead to, higher funding costs for major businesses. So we should see some slowdown in some of the sectors in the country, but overall, it's still positive. We still expect, to see improved, performance in terms of economic growth.
It looks like a very fine place to anchor on the economy, and a good way to start the week and get into the day for good business from this prediction you're giving to us now. Let's get into the messages now. I see Gilbert Musa's message from all the way from Vestac. He says, PAR is a game changer in manufacturing in Nigeria. As at 2001, an indigenous manufacturing company in Nigeria had to resort to gas as a means to meet their power demand. On trade with other African countries, as of 2003 and 2007, Nigeria recorded less than 3% trade with other African countries. So, anything you want to add to this?
I agree with him, really. In terms of, the power being the game changer, really. If we fix power, like I mentioned, we fix almost everything. So yeah.
All right. Well, that is it for Business Express this morning. Thanks for listening. Thanks for your messages, and special thanks to Oyinkansola Aregbesola, Investment Research Analyst, ARM Securities. Thank you.
Thank you for having me. Bye.
Do stay with us. There is a lot